are live for another edition of Daily Rates Live with the Mortgage Calculator. We will get started here in just a couple minutes. Today, we will be talking about, as you can see on the screen there, our FHA 203K renovation loans, which are a very popular product, especially right now when a little bit more of a buyer's market has hit. You can oftentimes structure a deal where we can get a 203K. So we'll talk about those in a minute. Right now, we'll give everybody a chance to get connected before we go into the daily rates. All right. So it looks like we're live on all platforms now. Let me go ahead and get started with today's show. Welcome, everyone. My name is Nick Hiersche. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in non-QM or non-traditional mortgage financing, as well as conventional FHA, VA, USDA, all the standard programs as well. So we take this time today to share with all of our customers, clients, partners, all of our rates for today, every morning. So today is January 20th. It's about 11 a.m. Right now we have live rates on almost all of our programs. So we'll go through a few different scenarios here in a minute. And towards the end of the show today, we'll have Jose Gonzalez, our sales manager, do a little bit of a presentation on our specific product for today. And then we'll end with Kyle Hiersche, our COO, who will explain a little bit more about how to work with our team. So, as I mentioned before I get into the actual live rates today, our topic for today is going to be our FHA 203K renovation loan products. These are amazing products. I've actually done some of these myself as a customer as well, but amazing products for a very specific need and a very specific type of transaction. But as I mentioned earlier, these types of deals are more popular now as we've moved from more of a seller's market to a buyer's market because they do take a little bit of work and a little bit of tricky structuring in order to get these deals put together. So here, after we go through the live rates on our live pricer, I'm going to have Jose Gonzalez, our sales manager with 27 years of experience, that's done a few of these 203Ks himself and obviously advises our team on these as well. We'll go through a very specific example of how to go through a transaction and structure a transaction using the FHA 203K in order to purchase a property that needs rehab or needs work or may not otherwise qualify for FHA financing, put in the work and actually get the loan for the work and the purchase of the home. Very popular program that works that in. So now that we're ready to check out the rates, let me go ahead and switch to my pricing screen here. Give me 1 second. And I'll open up our tool. And here we go. So this is our pricing tool at the Mortgage Calculator. Remember, we are a lender that is licensed in 17 different states for primary, secondary homes, as well as we have our DSCR business purpose loans for investors we can do in pretty much every state out there. So a lot of different options for our clients. And we specialize in non-QM options, but we also love to do conventional FHA, VA, USDA, all the regular stuff everybody's used to. So we'll take the time today to go through some live pricing with this tool. This tool is for our mortgage professionals. So if you'd like a full loan estimate and a full breakdown quote, please get with one of our team members and they can send this in just a few seconds. So this tool is for mortgage professionals only, and it's just to check out what's going on in the market today. So for our examples today, I'm going to set up an 80 LTV. That means 80% loan, 20% down payment. And desired price setting at 99. That basically means we're going to look for an option for one discount point in buy down. Most of our clients today in this rising rate environment are asking for a little bit of buy down to lower the rate a little bit into something that's more palatable. There's also 2-1 buy downs and all kinds of crazy things you can do. But just to show the average request, we will do all of our scenarios today with one discount point in our request. We're going to do first today a regular conforming loan, but then we'll go through these other options as well. So our first is going to be conforming or conventional. We're going to do a purchase 30-year fixed for all of our examples, primary, single family, and we'll use Florida, Miami-Dade where our office is based for all of our examples. Our estimated FICO we will use is 760, And our estimated debt to income ratio for all the examples will be 40, just so everything is equal and we can just compare the pricing for today. So let's check out what we have today for our conventional options. And just like every morning, this tool is live, so I do have to get through a check in order to pull up today's rates. All right. So as I typically say every day, the top programs are specialty programs. These do pop up on our pricing here. So these are for borrowers that do qualify under an area median income or in a certain census tract. So we don't want to look at these necessarily. Let's go down to the first regular option that anybody would be able to qualify for without restriction, which would be just a standard conforming 30-year fixed. And it looks like we're at a 6% rate for around 1 discount point. So yesterday, the rates were a little bit lower. So this is why we love to do this show. We see the fluctuations every day as the markets fluctuate. So, with recent dip in rates, we have seen a lot of activity. A lot of customers have put in applications within the last couple of weeks. And obviously, yesterday was a better day than today to lock, but please get with us before the rates go up any further. And we'll go ahead and send you those quotes and lock those deals for you. But if a customer does not qualify for a conforming conventional loan, typically the next option we go to, let's go back to our pricer, pull up an 80 LTV again. The next option is typically FHA. And as I mentioned before, in particular, we'll go through a very specific FHA product. But for right now, we'll set our general FHA, same scenario up. FHA does allow our borrowers to go above the debt to income limits of conventional, as well as a few different other loopholes that FHA affords us. And therefore, it is typically a better option or the next option that we go to after conforming. And the one thing to keep in mind on FHA, our top option here is 5.5 rate for just under 1 discount point. This is the best option the computer pulled up, the best combo. The one thing to keep in mind is there are additional costs on FHA financing for monthly mortgage insurance and upfront mortgage insurance. So the APR is a good thing to look at. So obviously the rate is much lower than what we saw just a second ago, but the APR is about the same. So typically we're going to want to compare apples to apples. So check that out, and that will compare your actual costs. Now, what really makes us special here at the Mortgage Calculator is if a customer doesn't qualify for either conforming, conventional, or FHA, there are a couple other options. If a customer has served, obviously the VA is an option, but only if you have a certificate of eligibility for your service. So we appreciate you. We can quote those in a couple minutes, but not everybody qualifies. And same thing with USDA, that's based on the property. The property must be in a rural area. So we can't really quote these up since not everybody is looking in a rural area. So if you can't qualify conventional or FHA and you're working with a bank or someone that doesn't have the options that we have, you're pretty much stuck. But that's where the Mortgage Calculator comes in. We have thousands of loan programs under our expanded guidelines, which means non-QM, another term for that. So this allows us to go beyond the conventional guidelines and beyond the FHA guidelines in order to find other programs and other alternative income documentation that we can use to qualify our borrowers. So if everything else is the same, purchase, 30-year fixed, primary, single family, FICO score, debt to income, but we're going to have a new box pop up here for alternative income. So full docs, what everybody's used to for FHA and conventional. Obviously, if we're going to do a non-QM or expanded option, we're going to choose alternatives. So we're going to switch from full doc to a 1-year or 2-year alt doc. Asset related, we did yesterday on the show. Business bank statement, 12 and 24 months, very popular. For investment properties, these options are great. And our most popular options here are our personal bank statement, 12 and 24 months. But by far, personal bank statement, 12-month option is our most popular. And these are for self-employed borrowers. So I'll have to click that. And what this does allow us to do is use 12 months of bank statements for a self-employed borrower who may not otherwise qualify to determine a debt-to-income ratio for that borrower and therefore still be able to do the loan for someone who may not otherwise qualify. So these are great options for our self-employed borrowers to either buy more home, qualify for more, or if they don't qualify at all, can now qualify. So let's check out the rates this morning. The rates are a little higher for non-QM always, but you can see they're pretty comparable, especially when you consider that someone who may not otherwise qualify is now able to get the home of their dreams. So we have a few different options here, ranging from the low 7s for 1 discount point up into the high 7s and 8s. All of these programs do vary widely for all these non-QM programs. Every program is very specific, has very specific guidelines. Please get with our team members so they can navigate which one of these dozens of options fits best for your scenario. Some of our non-QM options allow credit events such as bankruptcies, foreclosures, things like that. So there's very specific programs for that very specific need. So a lot of great options here. And remember, these are beyond what would otherwise be possible for this borrower. Now, before we pass it over to Jose for a specific example, I always want to pull up our investment property rates. We do, at the Mortgage Calculator, love to work with our investors. That is one of our most popular requests. And let's check out what we have this morning for an 80 LTV, 20% down, investment property purchase under our conventional non-conforming options. And then we'll compare those to our non-QM options, which we prefer typically. So for conventional 30-year fixed, everything else the same. Same 760 FICO, same 40 DTI. Let's check out our conventional rates. Keep in mind there is some additional costs or penalties that the government entities that are sponsoring conventional loans have added. So we do see a large amount of discount points here and costs on all these options. So great rate options, but you see these costs are pretty high. There are no one discount point options for a investment property purchase under the conforming 80 LTV program here. That typically leads our investors to request other options, and that's where we love to pull up our non-QM program. So still great options if you qualify full doc. No problem. We can quote these up in minutes, send you those quotes. But what we love to do is compare those conforming purchase options to the same option under our non-QM guidelines. This is a very comparable scenario when you see them side by side. A lot of times our investors are leaning towards the non-QM for a few different reasons. One of those reasons here, I'll show you in a minute, is the income verification. So our most popular program by far is the DSCR program because there is no income verification, no income or employment needed for the borrower. We're just going to use the property rental income in order to qualify that loan. Now, on all of our non-QM investment property, non-owner occupied, we typically have a prepayment penalty. So all of our pricing typically on the show, we're going to do a 3 years, our standard, but you can obviously choose 0 prepay if you so choose, and that will be a little bit more expensive. Or you can actually go to a 5-year if you want to save a little bit more money. But for the standard pricing, we'll pull up 3 years. That'll give us the most typical option. So let's check out our DSCR rates with no employment, no income needed for our investors. So you see the rates are a little bit higher. From the 7s, we get to the 8s. However, again, no income documentation, no employment documentation, goes much quicker, much smoother. And as you see here, less discount points. So non-QM programs are allowed to go higher in the rate, and therefore we can go lower in the cost. Investors love to save money out of pocket. 2% of $1 million purchase is quite a bit of money back into their pocket, which they can go and use for other purchases. So we have much lower discount points here, but obviously higher rates. We have dozens of different programs. These are pretty complicated. So you see all kinds of different options with different prepay and different DSCR terms. Please get with our team so they can navigate which one of these exactly fits your scenario the best. We get a lot of short-term rental requests. Only a limited amount of these programs do allow us to use short-term rental income if the property doesn't meet that requirement in the long term, etc. So please get with our team. They are all experts in these specialty programs, and we would love to work with you to show side-by-side comparisons on all these pricing. So that's it for today on the live rates. What I'm going to do now real quick is I'm going to pass it over to Jose here, who's going to go into a specific example. Let me pull up the graphic again of our FHA 203K renovation loan product. So we priced an FHA loan just a minute ago. Within FHA, there are different categories and different programs, and 203K is an amazing program for us to lump in rehab funds and also a lot of times use those rehab funds to make a property that would not qualify, because FHA does oftentimes need repairs in order to qualify for FHA. So these are great options for us, and I'll go ahead and have Jose take over and explain a little bit more, and then he can go ahead and share his screen and show an actual detailed example with all the rate and cost combinations. So go ahead and take it over, Jose.
Good morning, everybody. Thank you for joining us. Jose Gonzalez here, sales manager at the Mortgage Calculator. FHA 203K product is a very good product. It is available for purchases as well as refinances. Um, it's very unique and very useful because it allows the borrower, to overcome certain obstacles that may not allow financing through regular options that do not have a renovation component built into it. For example, properties that are missing components, electrical issues, the panels damaged, AC's damaged, or roof is damaged, something that may not allow it to close, and where the amount is too large to escrow for any kind of repairs. FHA 203K is the answer. So instead of having to go cash, fix, flip, hard money, your full doc borrower could go FHA 203K. There are two different options. The most popular option being the limited option, which is a more streamlined review, which allows up to $35,000 in repairs. The full 203K option is basically going to be limited by the value of the property and whatever it is you're doing there, because ideally you would want to keep it at 96.5% loan to value based on the after repaired value, which is the value of the home after it is completed. So in the and well, one other thing, which isn't really an obstacle per se, but the borrower that is buying a place, for example, place needs a lot of renovations. Borrower doesn't really have the savings. Doesn't want to load up the credit cards after closing to renovate a kitchen, renovate bathrooms, flooring, roof, windows, whatever it is that may be needed. Then they can purchase also a home that could be closed under a regular loan, but the borrower wants to finance up to, if they use the limited option, up to $35,000 uh, in repairs, and then they could close and then do their kitchen and their bathroom, window, roof, whatever it is that they're doing with their renovation budget, get that done after closing, which is and not charge up the credit cards, because it's what everybody ends up doing. Goes to Home Depot, charges up those credit cards, and then you know what comes next. So in the example here, we're using a $500,000 purchase price, and loan amount is ideally 96.5%, 482,500. Keep in mind here, the purchase price, if let's say in this scenario, our borrower wants to do the limited option and they've identified that, yep, it's going to be $35,000. Already had my contractor go out there with me. He gave me an estimate, and let's say it's exactly $35,000. So we would just, but he has a purchase price of $465,000 on the property, to use an easy example. Then you would just need to make sure that the after repaired value is at least $500,000 if you want to keep that 96.5% loan to value. So in the example here that we have for the rates, we are assuming that that's what's going to happen, but you would hope that the deal is better than that, that maybe they're getting the property for 440 and your after repaired value is 500,000. So your loan to value is going to be a little bit lower than 96.5, and maybe if you drop at 95% or below, you're going to have a little bit lower mortgage insurance also, because it's going to be a lower factor. So there are a number of different variables, but here you'll see that the lowest cost rate, which actually gives a lender credit of $1,203 to the borrower, is 6.75, but it is possible to buy it. And this isn't the absolute lowest rate on the rate sheet, but it's the one that more or less we want to keep it under 2 points of loan origination or loan discount, excuse me, for the rate. So you could buy it as low as 5.25 at a cost of roughly 1.9 points, which is a very good rate considering this is a renovation/purchase loan. So very good option. FHA, high loan to value. Obviously, it's a primary residence only, and all of the other FHA guidelines still apply. But now, just keep in mind for this type of loan, it is a little tricky. It does require a little bit of planning throughout the process. They do need to have their contractor already selected. They do need to have the estimate already detailed and prepared. Now, they don't need to have the permits already pulled, but they need to have the cost of the permits taken into consideration in the estimate, and everything that is very detailed estimate that 203K requires. And the contractor also then needs to be vetted and approved. As so, it is a multiple approval process. They're going to vet and approve the contractor. They're going to vet and approve the renovation, and obviously the borrower is going to have to be approved and for credit, income, and all of the other parameters that are always taken into consideration for a quote unquote regular FHA loan. So they may take a little bit longer to close than 30 days if you don't have all of that documentation. Usually what's going to slow you down is the stuff from the contractor. So just make sure that you do have all of those things in line when you do go apply, because as you know, if this is for a purchase, market's pretty competitive. And if you're putting 90 days or 75 days for closing, you may not get the deal. So keep that in mind. Work closely with your MLO, and you should be able to close this deal in 45 days.
Beautiful. Thank you, sir. So yeah, great option. Me and Kyle have both done those as one of our first home purchases. It's definitely difficult. So if you're a borrower, be ready to put in some work. It's difficult for the borrower. It's difficult for the MLO, but the rewards are there. Obviously, you can walk into equity pretty easily. So let me go ahead and pass it over to Kyle, who can explain a little bit more about how to get with our team.
Thank you, sir. Yeah, absolutely. So, deals like this, like Nick was discussing, is, they're complicated, right? So you definitely need a consultant to walk you through the process. We have over 375 loan officers all across the country, and we are licensed in 17 states. And we can do the business purpose loans that we specialize in most states as well. So our loan officers can not only help you with conventional FHA, VA, USDA, things like that, but our loan officers are trained to consult you through the process of our non-QM products as well, such as bank statement, DSCR, asset utilization, and all that kind of good stuff, right? So they're trained further than 99% of loan officers aren't aware of these programs or know how to navigate through them, but our loan officers can help you with that. So if you're already working with one of our loan officers, maybe they shared this with you, that's amazing. Go ahead and work with them. They can send you a specific quote for your specific scenario, just like Jose went over. If not, go ahead and go to our website, themortgagecalculator.com, which is actually right here, and we can connect you with one of our loan officers to quote your specific scenario in just a few minutes with a detailed quote like Jose just went over. So,
all right. We got 2 questions that we could go over real quick before we sign off. So, Jose, 2 questions for you on the 203K. Hopefully, you can answer them.
The first one I see that came in was regarding solar panels.
Yes, can a 203K be used for the purchase and installation of solar panels? Asked Mike.
That's a tricky question. If you're going to own the panels, right, because you are putting purchase and installation, I think it would be viewed as any other appliance type component that's permanently attached or a permanent part of your home. Again, I would refer to the guidelines on those and see. We'd have to, double check that answer, but it would appear that if you treat it like an appliance or other component, like an air conditioning system or heat pumps and stuff like that, I don't see why not, why it couldn't be done. And are there credit standards for a 203K? They're going to be the same standards for FHA. A 203K is a regular FHA loan. You have to be able to get the approved eligible. Now, it does have a little bit higher risk factor involved. So there may be an issue if it's a lower credit individual that you may not get the approval because the automated underwriting system doesn't like it. And I'm not sure if there's manual underwriting for 203K. I don't believe that there would be manual underwriting for a 203K loan, but we'd have to check that.
All right. Well, those were some of the questions for today, and we'll be live on, well, today's Friday, so we'll be live on Monday, back again once the rates go live. So we'll see you then. Thanks, everybody.
Thanks everyone for tuning in. Have a great